Hello and welcome. This is Rush Hour with me, Sumit Chaturvedi. Let's go to the biggest news of the day. We're talking about the fear of virus that has spread over to investors and traders, bringing bloodbath all over Dalal Street today. Nifty closed below 23,700, mostly dragged by ITC. Sensex also fell below 78,000 levels. Sectorally, PSU banks were at 1-month low, followed by metals and energy stocks. In fact, all sectors did decline in trade today. But what is the overall outlook looking like? Is it really a big bloodbath now, or is it bottomed out? We are going to talk to our market expert, Sunil Subramaniam, on this. Well, good evening to you, Mr. Subramaniam. Let's begin by talking about how deep is this bloodbath going to be, or the loss going to be? You expect it to continue for the next few days as well, or maybe weeks?
I think next few days is more closer to it because I think the reason the markets corrected, of course, the virus-related news was there, but I think also fund managers are hesitant to buy anything that's falling today. They are sitting on cash. They have good flows from domestic investors with them, but they're waiting for the earnings season to take a call on which stock. Second is the reason the markets reacted so badly is because valuations, if you see even the correction post the FIS selling, hasn't really taken completely away the what we may call rich valuations. So FIIs have been also selling. Domestics will wait till the earnings season, which starts from 10th January, for the news to come out. Then they will come in and step in on buying on either stocks which project a good future for the current year, or a sector which looks promising. But right now, we don't have that kind of outlook. So I think domestic fund managers are sitting on the sidelines and not really buying all that the FIIs are selling. So it's a lack of buying support as well as some selling related to the virus that's caused the crash today.
And apart from that, in the coming few days, what are the big triggers you are looking, big factors that can move the market either towards the positive or negative side?
Domestic fund managers' flows are largely on the mid and small cap side that they have with them. But FIIs are largely invested in the large caps. So if you want to look at the FIIs coming back in India, you got to look at the Nifty components, and banking and financial services is a big part of that index. So I think those are one of the key bellwethers to watch out for. IT is another one because foreigners of FIIs have generally been bullish on the IT sector for the past few months, especially since the Trump news came out. So on that factor, how are the IT segments likely to project for the year is also a key trigger. So I would say between these two sectors, BFSI and IT, the direction of the market will get determined. To a lesser extent, pharma, because that's also export oriented, would also come into play.
And tomorrow, the first advanced GDP estimates will be released by the government for FY25. Do you expect it to be, and as expected, it could be in the positive zone for Q3. So do you expect it to somehow support markets tomorrow?
I'm not sure that the GDP number, I think already RBI had projected a rise to 6.8 from 5.4, and the government numbers are probably likely to come closer to that. The markets, I think, already factored that in, given the RBI governor's speech. What the market will be looking for is actually specific sectors which are going to benefit. And I think there, one of the key things, another trigger which is to watch out is the budget. Is the budget going to be, again, a very infra-oriented, or is it going to be a bit more populist? In which case the consumption sectors could see some kind of a revival. Because one of the things which is affecting the Indian economy is that the consumption has been weak, especially at the bottom of the pyramid. You know, it's been a K-shaped recovery and high-end products are getting sold. But mass things, because of the inflation, hurting the consumer pockets as well as the lack of confidence in the consumer sentiment. So I think if the budget is another trigger, which would, if it gives a little bit of boost to the populism and government revenue expenditure, would again mean consumption stocks could be back in play. So I think the market would be waiting for these kind of triggers. I think pure economic or GDP data may not be sufficient to drag up the market at this current moment.
And do you recommend it a good time to enter the market? After all, both BSE and Nifty corrected over 1.5% today. Good time to enter market for those who are waiting and to buy more stocks in this kind of, we can say that, coming down of markets.
It's a good time for people to invest through mutual funds, because the more you empower mutual fund managers with cash at this time, when the timing is appropriate over the next few weeks, they will deploy it in the market. So rather than a retail investor directly going and buying specific stocks because he doesn't have a clue as to which company is going to post what kind of earnings, what kind of a guidance. So I would say if you commit to a mutual fund, especially an SIP, you can top up your SIP a little bit. Then at the right moment, in the run-up to the budget, post the earnings and the budget season, if fund managers are empowered with a lot of cash, good quality stocks which are correcting, they can go in and buy. So I think it's a good time to put a staggered approach through diversified mutual funds. And I would point out the multi-cap and the large and mid-cap and flexi-cap as the key areas where investors should focus in making some allocations today or in the next few weeks.
So one last question before I let you go, Mr. Subramaniam. Is the budget providing an opportunity? You think that optimism will be there before budget, will be building up before budget?
Before the budget, there's the economic survey which comes out a couple of days before. So that will give you a good sense as to where the things are in play, especially the amount of capex the government has spent in the current year or expected to spend. Because they had a number of 11 lakh crores. We know the first half was disappointing. So if there is a pickup in capital expenditure, that's a good signal. So the second is that so then the market will read into a further rise for next year. So I think a pre-budget rally or anything, so to speak, has to come from a positive capex. That's where I think FIIs, foreign rating agencies, are more keen that the government spend on a development where there can be a multiplier effect over the longer term, whereas domestic market is probably expecting a little more populism because they want consumption to be boosted up by the governmental actions. So it is going to be a nice interplay. And so to expect a pre-budget rally, I think also the factor that for FIIs, Jan 20th, when Mr. Trump takes charge and the immediate aftermath on what he announces, which are the strong actions he's going to take, are probably going to keep FIIs on the sidelines a little bit. So I would say a pre-budget rally, I would not so be hopeful. They would rather wait for the budget to come out and lay out it. They'll analyze the budget. And along with the earnings season and the budget, I would say in February, you will see a specific sector-related action coming both from FIIs and from DIIs.
Well, thank you, Mr. Subramaniam, for joining us this evening and putting before us the right picture when it comes to overall why markets came today. But once again, we should tell the viewers why the markets came today. Both Sensex Nifty were down by over 5% because India has reported its third human metapneumovirus or HMP infection case after 2 months. Old boy admitted to private hospital in Ahmedabad. He was infected with the virus. Earlier in the day, Indian Council of Medical Research (ICMR) detected 2 cases of HMPV in Karnataka through routine surveillance. Well, even as concerns grow, government has maintained there is no cause for alarm, and DG of Health Services said viruses akin to viruses that cause common cold. Dr. Atul Goyal of DGHS advised for basic precautions to be followed. Listen in.
See, I don't think we should be pressing the panic button because HMPV is not a new virus, it is an existing virus. And the statement, the way report has come out that this is the first case of HMPV in India, which is not true because HMPV is an existing virus and certain percentage of people do get affected by this virus. And it is not something new. And the baby, the child that has got affected, has got no travel history and they're all local people. They're not coming from China or Malaysia or some other country. So I do not think there's any connection to that. China's outbreak is, they are saying, is a new variant of HMPV.
Well, it's time for a quick break on Russia at this moment. We'll come back with more news updates on the other side. Stay tuned to ET Now.